Hi, this is Sheffy.
Hi, this is Avi. We wanted to touch quickly a few news topics that we thought are worth talking a little bit more about. So today is Tuesday. Albert, the fintech startup from California, raises $50 million. And this is a topic we've been covering a lot at Coverager, the whole concept of fintech companies
So every
entering
time we
insurance.
say insurance under the influence, we want you to think how fintechs are entering insurance, how prop tech is entering insurance, how basically any vertical that has users as opposed to customers, people that actually interact with a product, can easily backtrack into insurance and start offering the product by partnering with intermediaries.
Yeah, so Albert, following the news, of course, the big news of Acorn. So Albert, also an established insurance agency, over 3 million users. They offer a free app to help people manage their budget, save money. And then they have this subscription service called Albert Genius that allows users to connect real time with financial experts to get help with different things like saving for a vacation, saving for a home, getting insurance recommendations. So things in that nature. And I always look at this category and say that the data, the amount of data that they have combined with the reach and the ability to interact with consumers frequently because they live in a user's app gives them a big advantage. And they could be great partners for insurance companies, but also could be very bad news for insurance companies because they are getting people to think about their finances more frequently than they used to. If you remember the old days where you waited to get your paper bill, credit card statement in the mail, maybe it got lost and maybe you were too lazy to go and look at it. These companies are making it very convenient for users to stay on top of their spending. And guess what? They're thinking more about insurance. And there's a lot of potential. Again, if we look at another fintech company just last week, Emma, smaller, raised 2.5 million. But an interesting stat, they have 22,000 users per employee. Of course, not everyone is a paid user, but the ability for them to attract so many users gives them a lot of power to eventually move into insurance and take it more seriously. And as we said in the past, kind of become the broker of record for a lot of users when it comes to insurance.
So Avi said engagement, and I typically don't use that word or try not to. And I know we shouldn't compare apples to oranges, but when I think of life insurance companies or P&C insurance companies talk about engagement, and then they follow up with, here's a free digital will service. How often are you going to update your will? So here's a product that you actually interact with because you do check your checkings and savings account, and then they offer tips as well. So here's what we know about Albert, right? So right now they're offering or focusing on life, auto, and renters insurance. All of these are through, like their partners are coming through their agency. Life insurance they offer through Legal and General, U.S. Life. I saw Prudential. With auto insurance, you get a call back from CoverHound, which is something we wrote about in the past. Renters insurance goes through Lemonade, Geico, sometimes Progressive, and oftentimes Safeco is also in the mix, right? So they got a good bunch. And again, they control the user aspect of it, right? So everything stays within the app. I think sometimes there's going to be a redirect when somebody wants to purchase, but you can get a feel for the quote through their application.
Another topic not related to fintech, but still high usage and something we talked about in the past as well. Allstate with the news partnering with Ford, connected cars, that whole category is developing. And automakers, for many reasons, are starting to become data players. And there's obviously a big financial benefit. In my view, kind of ways kind of developed the market in a way when they started to advertise businesses on the road while you were driving. So they will tell you, you can gas up here, you can get your coffee here. And automakers are saying, wait a second, we have a screen in the car way bigger than your iPhone. We are in a position to allow you to find the nearest Starbucks, pay for it, in the car, and not even have to pay Starbucks, take a commission. So everybody's looking at that. And obviously, there are implications for insurance. So obviously, a lot of insurance companies are experimenting with telematics. But I believe personally that the future of telematics, right telematics, I have to say that, like proper telematics, belongs to automakers. Volvo has the ability today to, I don't know if the car actually is in production just yet, but something that's in development. They'll be able to monitor a driver to see if he's drunk or if he's not well. They'll be able to shut off the car and take it to the side of the road. So just imagine the implications when it comes to claims and preventing accidents. Mitsubishi has another heart sensor. They'll be able to know when someone, again, is not feeling well. They'll be able to call for help. So automakers are better positioned than your kind of standalone telematics partners that rely on smartphone or a dongle that goes into the car. I think automakers are going to be aggressive about utilizing that data for the simple fact that at the end of the day, they own the experience. They make the car, the user drives their car, so they'll be in a better position to give insurance companies better data and help around the prevention of any risk or accidents and things in that nature.
So I'll just add a last angle for this. If you think about what Ford or announcements with Ford, we had Ford and Allstate, Ford and Liberty Mutual, Ford and Nationwide. If I was a user, I would just pick one, but it's clear to me that the entity that's doing the choices is Ford, and so the power is in their hands.
Another last topic, still under the category of insurance under the influence, Zumper, the real estate platform allowing people to look for apartments, raise $60 million. According to the press release, they're close to $150 million. 80 million people a year go to the platform to either look for apartments, list apartments. And now the founder says that they are also looking at additional products to add to the platform. And guess what? Insurance is one of those products. Just yesterday, Liberty Mutual announced their Renters API. Clearly, that could be a great collaboration, but there are many other players in the space. And we know Lemonade usually gets to partner with such companies. But we're seeing more and more in general, and we always like to talk about it, more and more companies beyond insurance are entering the space because now it's time to start making some more money. Customer acquisition is a challenge for many businesses, and insurance is such a great revenue source. And really, if you look at it, most insurance companies, they still have that disadvantage when it comes to the usability aspect. And this is where other industries have an advantage. So it will be interesting to see what companies decide to partner with who, and maybe we'll see some acquisitions. We know Nationwide launched Nimble, kind of like another money management app specifically designed to help users get out of debt. It would be smart for some insurance companies to look at acquisitions in the fintech space and not worry so much about selling their product, just having that data element and owning that whole database of users and being able to see what happens behind the scenes.
So in 5 words, insurance is the new black. Agree?
The new black. I think it's a black and white business. I definitely think insurance is a black and white business. It's
zebra.
Yeah, to me, it's straightforward. Insurance is straightforward to me.
Well, it's only straightforward when you're looking at cookie cutter risk. Maybe term life insurance, renters, auto, right? It gets more complicated when you're dealing with small business or middle market. But this is basically where we're seeing all the happenings occur and people move in.
Yeah, definitely. I still think that, at the end of the day, when you look at insurance, you say, is it about price? Sometimes it is, sometimes it's not. It depends. I don't know. I feel like sometimes you can see different models and this is not right. This is probably not going to work.
Can I say Traverse is not going to work?
I think they're not advertising it enough.
They just launched in Texas. I mean, look how slow they're moving. Where are they going?
Well, they're not. In my view, they're not putting enough budget to advertise it.
But that has been a problem with a lot of insurance companies where they get the technology out of the way, and we're seeing that the kind of that low code, no code trending recently with Instanda today and Uncork. So if you think that's going to seal the deal, I mean, you have to figure out what happens in terms of marketing and strategy, and this is usually where you spot the weaker carriers.
Yeah, I think insurance, first you need to get technology out of the way, just to get it out of the way, but it's not going to save you. It's really not going to save you, because even if you do acquire the customer through your new platform, there's still no loyalty in insurance, just in insurance. There's always that fear that a new company will come along and be able to attract the customer for a better price, or a better package. So technology is not the answer. Obviously, you need to be capable to have right technology to partner with different companies. You want that, but it still boils down to marketing.
But even with, back to Ford. Ford picked Liberty Mutual, Nationwide, and Allstate. They didn't choose one; they choose several. So where's the advantage?
There is no advantage.
The advantage is for Ford.
For Ford, yeah, you don't want to stick to just one company, and we saw that with Tesla. So despite the amazing Tesla brand, if the insurance product was expensive, people said, no way, I'm not switching. Right. That's why you don't want to limit yourself to one insurance company unless it's lemonade with the best price. Then usually you will win. But for Ford, smarter to just sell the data and work with different partners and say, okay, we checked 3 quotes, because a lot of consumers, they do want to check and they do want to compare. And even if they don't have that option, they'll always go back and say, okay, well, I saw the price. I checked in a different platform. I see it's better. Let me go get it.
Okay, so we always end with a bottom line. Let's end with a final thought.
Final thought, I would say fintech. Fintech to me is a very trending category.
Can make you or break you. So I know you've got some insider knowledge of a fintech player that is looking to partner with an insurance intermediary, and they're going through the names, and obviously it's if they choose the one that we think they're going to choose, then it's quite a big deal. Yeah,
it's a big deal. And again, fintechs, just because they don't have that perfect revenue stream just yet, because it is no fee, and that's how they attracted customers. But I see fintechs combined with the models of Gabby, Jerry, and Cover. I see that a big success. I'm not a big fan of just sending quotes and paying per quote. That benefits maybe them short term, but long term, if fintechs want to grow up, they'll need to do more on their end, or either partner with a company, as we said, such as Gabby, Cover, Jerry, to take on the insurance shopping. And bottom line, fintechs are going to make an impact on the insurance space.
No doubt. So we agree.
We agree for a change. That's it for now. Until next time.
Bye, everybody.